Welcome to a Junior VC Unfiltered. I'm your host Mazen, and this week I have with me Keshav, Bhumika, and Shreyans. Keshav, can you tell our listeners why we chose this topic?
Sure, Mazen. So I think this was in the works for some time. We in the team itself were discussing about all the recent developments which were happening in the tech startup space, right? And in terms of timing, I think this was a perfect week because obviously it's the Independence Day week. So there's a lot of national pride as well as nostalgia which you have. And what we wanted to do was that with all our previous pieces, like we have done for, let's say, agri-tech, Tata piece, space tech, all of that, we wanted to trace the evolution of the tech startup ecosystem in India. And we started with 1960s to 2021 now, right? And I think this year it has been an epic one because we have already seen close to 12 billion, which has been invested in tech startups in India. We have 20 unicorns, which have been born. 6 were born in just 4 days in this year, right? So it's actually the entire ecosystem which is coming together and now building out into a storm. And what we wanted to showcase through this piece was that at the end, once you read the piece, I'm sure that readers will have a lot of feel good as well as national pride into reading how we have shaped up over the last few decades.
So can you tell us how this all got started, Keshav? How did the tech ecosystem shape up in the beginning, in the early 1960s to 1980s period?
Sure. So I'll talk about it in a few phases or the waves as is popular right now, right? So in the first wave, what happened was that in the 1960s, there was Jawaharlal Nehru who established IITs. And the vision was to transform India's growth journey through technological and engineering innovations. And that was the time when the Indian computer education system all actually started. And the tech boom seeds were actually sowed, right? And in the same decade, what was happening was FC Kohli was brought in from Tata Electronic Computers to run India's first tech startup, as we call it, which was Tata Consultancy Services. And the year was 1968. Then 5 years later, what happened was a dedicated IT park was set up in Santa Cruz in Mumbai, which was to promote the export of electronic products and software. And an year later itself, we built India's first indigenously built computer, TDC-312, right? So there was a lot of formation of that tech had itself started. And then in 1973, the Foreign Exchange Regulation Act came in, which essentially imposed restrictions on the use of foreign exchange by Indian citizens and government. And the act itself made it difficult for IT MNCs to operate out of India. And what that meant was that while the government allowed the import of computers exclusively meant for software export, there was a great segue which Indian companies itself received to start building in India and selling to the world. So they started thinking about and exporting software services. So that was actually the first sort of phase in which we were. In the second phase, what happened was because of the regulations, there was IT service firms which started coming onto the map, and the founders of these companies were educated. They had studied at prestigious schools in US and came back to India. So it was actually like a Swadesh movement. And the IT businesses that were set up nurtured these first batch of entrepreneurs. So similar to the Flipkart mafia, which we have now, which is very popularized. At that time, it was companies like Infosys, Patni Computer System, which heralded this first set of bold entrepreneurs. And at that time, the venture capital ecosystem was also very nascent. So raising a seed round meant that you would either deploy your own savings or borrow it from your friends and family. Banks would be reluctant to lend to these new startup species. So that was on the financing front. And in 1980s, we again witnessed a new wave of IT entrepreneurship. So it was led by Azim Premji from Wipro, Rajendra Pawar from NIIT, Ashank Desai from Mastech. And all of them understood what was missing and actually tried to solve and build an enduring business in each of these respective verticals. And then in terms of the center for development of advanced computing was actually set up as a National Computer Center at IISc Bangalore in the same decade. You started attracting giants from abroad like Citibank, Texas Instrument to set up software development centers. Bangalore as an IT hub also came into prominence with all these developments. And for the next set of techies, it became the sort of the hunting ground to come together and build something new. And at the same time, there were players like TCS, Wipro, Infosys who were leveraging Indian talent to build software in India and sell to the world. At the same time, there were some challenges which were coming in, right? So this was during the 1980s phase where you had regulatory red tape, license raj, which made it difficult for Indian businesses to continue to drive businesses, right? So there was a lot of concentration of power among 3 or 4 major companies like Tata's, Birla's, Mahindras, right? There was still not enough depth to purchase software. The purchasing power hadn't come in Indian consumers. And to get, for example, a telephone license, you had to wait for almost 5 years. So in line of all that, the software export market still presented very lucrative opportunities. And finally, in the third wave, which came about, which was when BSNL launched the first commercial internet service in 1995 and actually exposed Indians to the World Wide Web. And this was interestingly before China got internet. So we were actually among the first to launch in the Asian countries. And in that same time period, you saw very interesting companies born. So InfoEdge came in, which was one of the earliest companies. They started different verticals like Naukri.com and others. Rediff.com came in 2001 and had a very successful IPO in NASDAQ. Shadi.com came in, which was the first matrimonial website. And then IndiaMart came in, which was India's first B2B marketplace. And all of these companies picked the trend fairly early that Indian consumers would digitize, go online to purchase these various services. And at the same time, there was a challenge that internet was still a luxury, which could be just accessed via broadband connections. So while that was there was that thinking that internet would eventually rule and software would start to eat the world. It was just a question of timing.
The next few decades led to the creation of many of the consumer brands that we know today: Zomato, Flipkart, Ola, and so many other brands. Bhumika, can you tell us what factors made this next evolution possible?
Sure, Mazen. So before we come to the Indian ecosystem, we could sort of go over what was happening outside of India. Between 1995 and 2000, the word on the street was that if any company had a web-based presence, they had probably already bagged millions of dollars in investor money. And the investor fear of missing out was driving decisions more than anything else. Forget profits, not even revenues were a metric to judge the soundness of businesses. So this bubble had to burst, and it did in the year 2000, where coupled with multiple Fed interest rate hikes and a Japanese recession, there was a free fall in the prices of major US tech stocks. And within a few weeks, all the values that they had gained over the years were just wiped out. And many of them shut shop, and even after listing on public markets. So when after a while, when things were sort of returning to some sort of normalcy after this dot-com bubble, investors started to turn their focus towards India for a multitude of reasons, some of which were obviously to replicate the Chinese success that they saw in Tencent, Baidu, Didi, Alibaba. And the population was the one proxy that they were freely using for this. And once investors landed here, though, they realized how broken and how heterogeneous the market actually was. There was a lot of diversity and too many cultures to keep track of to make any blanket assumptions about consumer behavior. So at the same time, they didn't want to give up just yet, because TCS, Infosys, Wipro, and HCL, all of them crossed $1 billion valuation and in revenue, for the first time. And this was in the 2000s. TCS went public. Google, Yahoo, Microsoft started showing their interest in setting up R&D centers in India. And in 2000, in 2006, InfoEdge went public, and it had Naukri.com and 99 Acres under its umbrella by then. So the question was now around the extremely low internet penetration, the lack of a decent number of mobile as well as laptop devices, and an Asian payments infrastructure. And VCs were in this constant mode of double think about, what was going to happen. And things clearly showed some sort of, sign of change when the iPhone was released in 2007, a new version of it, and that pushed Google to release a beta version of Android. And it was the first glimpse of what was coming, except nobody could have really guessed the full scale of it just yet. Things changed when, another conundrum came in when this news was brought to VCs that they had already poured some money into early tech companies in the first half of the decade, and they weren't sure anymore whether these would survive this new wave that was coming. Certain investments in startups working on SMS-based services looked like they'd reach their natural end unless there was a discussion of a pivot. And this sort of forced investors to think about it, at least for a short amount of time, and what sort of define what future shock would mean in their context. Does cutting edge technology have to be at the core of a tech company for it to be future proof, or is it something that it can sort of be picked up on the way? But of course, like all existential crises, this passed as well, and investors looked at the bright side, the many ideas that could now come to fruition. So a lot of VC firms send Indians from their team back home to sort of go figure out the market and make good on their vision. Now, most of these firms arrived between 2006 to 2007 and had like a roughly $150 million wallet and an average 2-period time frame to invest it. So that meant that 2007 to 2009 would be an extremely exciting time to be a founder in India. And while there were a record number of investments made in this period, VCs had to be extremely patient to sort of reap the benefit of their investments. The fund and the founder were ready, but the customer still wasn't. The shift from offline to online would take a while, and some more time would go into convincing the quintessential Indian household to loosen its wallet. And that's not to say that fundraising didn't happen. It did, and with a lot of extravagance. There were headlines almost daily in this period in the news, which had far-reaching effects. Many Indians came back home with the intention to build their own businesses, and many executives quit MNCs for the same purpose, because timing was, a very important factor for a startup, and many people felt that this was the sign that this is the time that people love speaking about, that it had finally come. And Flipkart, which is the poster boy of the Indian startup ecosystem, was founded in 2007, as was InMobi, and by the next year, total funding raised had crossed $1 billion. Quikr, Zomato were founded in another couple of years. We saw Ola and Paytm on the scene as well. The progression was very quick and very mesmerizing in its own way. And soon, Make My Trip would list on NASDAQ, and that would mark the completion of a very successful decade for the ecosystem. Nobody was focusing on the heterogeneity of the market anymore. It was decided that the models from the West were simply not replicable in India, and they needed to go. The investors wanted innovative solutions and were now more willing to sort of lend a year and some funds to someone with good ideas. They stopped looking for the typical MBA grad with polished English and turned their focus to raw ideas and conviction at this stage. And different sectors saw different type of players setting the trends that would eventually shape the future of these markets. Within tech, there were subsectors like EdTech and software as a service, and players like Byju's, Freshdesk, Policy Bazaar had garnered attention and were being funded. And they still to this date continue riding on their first mover advantage. But this biggest sector that put India's startup ecosystem on global headlines was e-commerce, and Flipkart's performance was sort of a litmus test for the space, not only because it was among the earliest players, but also that it had grown into a proper horizontal marketplace. Many investment thesis was confirmed when it was seen that the Indian customers were beginning to purchase items online and were displaying some amount of trust in the online payment system and online marketed goods. So what Flipkart gave the ecosystem was not just everything that came out of the Flipkart mafia, but also it was start of a starting point for vertical e-commerce to be, thought of even. The likes of Lenskart, Zivame, Pepperfry, Bluestone, FirstCry were all made possible by understanding consumer behavior and building customer-centric platforms. And as trust in the system deepened, many of these startups were able to find deeper markets and develop their offerings for target audiences that were previously declared to have like no real market opportunity going by TAM numbers. So now that a large number of people were interested in making online payments, it was a good time to address the shortcomings in the payment space as well. So that brings us to the payment sector. Paytm was among the first Indian players in the space, and it had started as an experiment with three things that the internet allowed for or offered. One was advertising, one was content creation, third being commerce. It later pivoted into a payments company, and MobiKwik, Freecharge emerged on the scene as well. All were sort of offering to help India in the transition towards seamless online payments. And payments and commerce went hand in hand, and that sort of reflected in the way that these payment companies were structuring their strategic partnerships with old and new businesses alike. So they of course needed bank partners, but they were also approaching newer businesses. For example, MobiKwik would partner with Uber, Paytm would partner with Zomato as well as Ola, and it's easy to see how this would lead to a win-win situation here. And with time, the payments infrastructure in India would get so strong that existing unicorns would begin to make bids for exclusive partnerships way before companies had a working prototype. But we can perhaps circle back to this when we talk about UPI. But the crux of the matter was sort of that there was a lot of activity, a lot of friendships, a lot of healthy competition in the ecosystem. And by early 2015, 6 of these companies had been able to achieve $1 billion valuation, which is huge. Flipkart, Snapdeal, InMobi, Quikr, Ola, and Paytm. So at the time, India had around 350 million internet users. We were adding 6 million new ones every month, and the existing market opportunity went up more than 3 times from 2009 itself, like valued north of 12 billion or something in 2013. We have to check this number from our piece, but yeah. So the markets seem to be presenting an unending amount of opportunity, and during this time, the ecosystem saw valuations hit the roof, perhaps like even shatter this roof. In the interest of the market, like so high that 650 companies had bagged angel investments in 2015 alone, which was a first for Indian markets. And like always, it was also, the market was free to decide what was reasonable and what was not. And some market forces believed that these valuations were bogus, and that gave birth to the profitability and cash burn debate. And it was noted that despite all the nuances that the business models of all these ventures backed by deep-pocketed investors had, they had one thing in common, which was aggressive, acquiring of the largest number of customers in the shortest amount of time. And they didn't really care about the cash burn because investors were fine as long as their revenue multiples were growing. And these companies were offering mammoth discounts on their products and services and bleeding their competitors to death. Some sectors had margins that left room for more than a single player to survive, but many others had a last man standing situation. And to many people, the optics just didn't seem right. Like a loss-making business with a stratospheric valuation sparked a cognitive dissonance. And so naturally, there were discussions at length about the ground reality, assessing whether this really was a bubble or not. But the telling feature of bubbles is that they burst, and never without us noticing. So a lot of ventures ended up collapsing or being sold in distressed sales. Housing.com went from the next big shot of the ecosystem to a plain liability that no VC wanted to have anything to do with. Freecharge was bought by Snapdeal for 400 million, and shortly again was going to be sold for barely a quarter of that price to Axis Bank. Folks at Jabong had passed on a $700 million offer from Amazon because it seemed too small for them. And eventually they were bought out by Flipkart for a scanty 70 million, a tenth of their old offer. And the food tech bubble was the worst one to look at, with players like Tiny Owl being acquired by other smaller players, in this case being Runner, and those were in turn eventually bought by Zomato. So all of this significantly slowed down the pouring of VC funds into the ecosystem, and startup funding in the second quarter of 2016 had dropped to like 583 million from its recent peak of 3 billion in the last the last year, and the ecosystem was now facing its first major winter since the funding explosion of 2007. And but winters come and go, and Jio came in with its game-changing 4G LTE network to sort of defrost the situation, and internet penetration doubled from around 27% to 50% from between 2015 and 2019. And this price point was allowing for underserved communities to access the internet, and this penetration of internet services in the population gave founders and willing builders a lot of insights into the habits of the next million Indian customers, and this brought forward a lot of opportunity for making like a far-reaching positive impact on the country's economy. Now, 2/3 of India's population still resides in a rural setting, and a majority of this population depends on agriculture or related activities as means of livelihood. So taking agri-tech as an example here, the physical technological interventions that were already in place needed support from private capital, which they got only, the free flow started only after 2011, after some favorable reforms were made and sort of turned agriculture into a lucrative investment destination. And once the rural population was able to gain access to the internet, it followed naturally that people would be interested in finding ways to use it for the betterment of their agricultural outputs. And this growing interest is what fueled companies like Cropin, Stellapps, Agrocart, which we've mentioned extensively in our agri-tech piece, sort of come onto the scene and help farmers realize their potential. And another sector that was previously given the cold shoulder because of low internet penetration in the country and the small TAM numbers was social commerce. Now, with the advent of Jio, social commerce saw not only an interest, but a lot of diversification in business models as well. Players like Meesho, Shop 101, and Glow Road use the reseller model, where individuals played a role in curating shopping experiences for their network and earned margins for each item sold. And then there were players like DealShare that used the group purchase model to offer products to consumers under the maximum retail price if bought in bulk, which encouraged bulk ordering for friends and family. Other ventures like Bulbul chose to sort of include a live streaming model to involve the customer and ease the process of decision making. Then there was also Mall 91 that aimed to fulfill rural India's shopping aspirations, thanks to the availability of inexpensive data. So the need for India-specific models also inspired a lot of entrepreneurs all over the country to come together and create something unique to solve problems of the next million users. And while these founders knew and understood the problem in and out, they needed help in navigating the business side of things, as many of them were building in new spaces or were first-time founders. And the guidance that these founders needed in the initial stages of setting up their business was something that accelerators and incubators were being set up for. So a lot of these like Make the Future and a lot of basically MNCs with an accelerator arm and everything started popping up in India post 2015, and a large number of applicants were also making it into Y Cohort. So all in all, a lot of progress was being made and things were looking extremely good for.
Thanks so much for that, Bhumika. It sounded like the Indian ecosystem was very well poised by the time we got to 2015. But Shreyans, can you tell us what was the push for Indian tech to grow exponentially from there, and where are we today?
Interesting. Thanks, Mazen. So the Indian ecosystem is is probably one of those beautiful stories that you see a lot of up downs initially to start off with, not a lot of resources, not a lot of push from the government initially, and then all of a sudden you see this acceleration going up, right? In any country, well, the companies are formed. Much of the acceleration comes from the policies that the governments kind of have put in place, uh, and so like it in India as well, right? So what started off as India, of the billion people that we had, none of them had an identity. None of them had, a recognition for themselves, and that's an issue for any big country, be it China, be it the US as well. India had started off giving identity to each and every one of them much earlier than these startups had accelerated. In about 2011, they started the whole Aadhaar initiative. So it took nearly a decade to set it out right, and until 2018, they kept giving out Aadhaar until they do as well. But they had accumulated that identity issue for everyone, and they'd given out. So once the Aadhaar was given and each and everyone had that identity, India launched the UPI, which is the Unified Payments Interface. This single product had changed the whole tech ecosystem in India, just because of the ease of it. Now I've used payments in the US, I've used payments in China, Singapore, Hong Kong, all these places. I've never seen something like UPI, because UPI single-handedly is by far the best payments framework that one has developed, because it directly goes from bank to bank and doesn't have a wallet as such. And why this is so important, because India's per capita income is low, and much of the rural folks need to see the money directly into the bank rather than holding on wallets and taking back and paying fines for that, which is what the push had started off. Right now, Jio was in its early days in about 2017-18. They had about 100 million odd customers in 170 days or so. But every month, Jio is actually growing. Every month, you could see Jio growing 10 million customers a year. Now, to give a context of what 10 million is, 10 million is actually the population of Sweden, right? So what Jio actually did and what UPI did cohesively, no country or no foreign company cumulatively have ever done in their history. Now, this was revolutionary. This is what rolled the eyeballs. This is what got folks like Google, PhonePe, looking at India and saying that, geez, this is something big that is happening in India, and you could basically do the payments at a single click of a button. And this was integrated in almost every particular payment system or payment app that you could probably find in India today, right? So the actual beneficiaries, if you see, of the UPI were actually MSMEs, although they were like cash dependent until now, and understanding tech was pretty hard for them. What it actually did was it actually eased the whole system for them. It eased the system where it was so cash dependent to be so cashless now, and 30% of the sectors, which was MSME, needed this digital push so that they could kind of accelerate their business and focus on their business. Now, this led to an arrays of startups that came along with them. There were startups that focused on basically creating frameworks of these merchant payments. BharatPe came in, they did really well in that. Khatabook had a vision of since MSMEs are doing a lot in terms of their business, kind of to accelerate their whole Khata situation that is over there and scaled up to about 1,000 odd cities. Now, when all this was happening, India was actually moving and marching forward while the world was just witnessing what India was actually going through, right? Well, in 2017, 2018, we had somewhere about 6 unicorns. In 2019, we come in and we have about 8 unicorns, which is much lesser than what any other country would have at that point of time. By means of any other country, I mean the biggies, which is the US and China, right? Food delivery applications had kind of shrink. We had just 2 players eventually, Swiggy and Zomato, and they had scaled up to like over 500 cities odd. While all this was happening, what we had witnessed was that we stopped copying the foreign businesses in terms of the business models that we had, and we started creating our own indigenous business models, right? You could basically find India solving for Indian problems. We could see networks kind of coming in and solving these manufacturing industries issues that they were kind of going through in terms of the business to business. Infra market would come in and solve issues where construction industries and construction materials would be accessible to almost any particular rural as well as urban India. So now you could basically find, 2019, the rural internet penetration and the rural internet adoption is a lot higher than the urban one, which is what actually India was looking forward to, right? The whole idea of Jio when they started off was basically to make sure that internet penetration reaches up the rural population, and the rural population, kind of gets to know what exactly internet is, and the adoption is to be honest is terrific, right? They have adopted internet as their very own, and they've been using it quite evidently. And to basically, to hold up all these other industries, our logistics had to be strong, and our logistics kind of delivered, on time. We could find startups like BlackBuck, Rivigo. They could basically hold as a backbone for all these industries and deliver for all these industries, be it B2C or B2B. At this point of time, by the end of 2018 and the start of 2019, UPI value grew 700% in this calendar year, which is why this is a very important year in the whole Indian startup ecosystem, where the total transactions crossed over 1 lakh crore, right? So overall, if you see, this was a good start for 2019, and probably looking forward to the next decade to come in. So while this was happening, India Stack, as we call it, which is headed by UPI, followed by Aadhaar. Then we have DigiLocker, which started in 2016, which is basically to store all the it's like a digital repository for all our documents and the eKYC, etc., etc. It was kind of getting filled, and much of the startup ecosystem were kind of using this framework that was set out by the government, and internet penetration slowly reached 49% in 2019 start or so, right? The idea of internet penetration is key to the Indian success, but the bigger success of internet, right? Our data that you see over here is $0.09 per GB compared to the US, and I can probably it's fair to say that I find the whole Indian internet to be a lot more powerful than the US internet, right? So at that point of time in 2019, we had about 350 million smartphones, which was obviously going to rise because of the affordable smartphones that we were building with the likes of Google had started producing phones for India, as well as Vivo, etc., etc. A lot of phones start coming in. India kind of pushed. We had our SaaS startups kind of delivering and producing products for the US market continuously. Freshworks had kind of reached 100 million ARR. From the US market. At that point of time, what happened was delivering basically, to their greatest potential. Nykaa, which was a D2C brand, kind of hit profitability for the first time. A lot of adopters from rural India came in. Their total annual revenues were about 1,000. There's one thing that was India actually missing in all this India Stack that was happening, right? The final touches, if I may have to say, which was basically, now we have so much data, how do we actually share the data, right? So that point of time, the Indian government also came up with this whole account aggregator system, which was actually started off in 2016, again, well before then it actually came to life, right? You could see a lot of adopters for the account aggregator, where an account aggregator becomes the policeman for kind of helping companies and the banks and the financial institutions basically share the data. This was solved. This was adopted really well. Even much of the Indian ecosystem were now accessible to the existing payments that they have in hand, as well as the data that they have in hand, the Indian government again, came up with another blockbuster model in the start of 2009.
Thanks, Shreyans, for that that background and telling us how the Indian ecosystem got to where it is today. Thank you so much, everyone, for tuning in to a Junior VC Unfiltered. We hope you enjoyed this episode, and we will see you again next week.